Welcome back and thanks for staying with us to business news. And this regards the Central Bank of Kenya, which has for the sixth time lowered the base lending rate to unlock credit to the private sector to create more to unlock more economic activities. The Monetary Policy Committee made the decision based on the economic environment, noting that there was scope for further monetary easing. As Jimmy Mbogo now tells us in the following report, the Monetary Policy Committee noted that overall inflation declined to 3.8% in May, remaining within the targeted range.
The June Monetary Policy Committee meeting resolved to lower the base lending rate from 10% set in April to 9.75% for the next 2 months. A 25 basis point reduction that reflects a continuous monetary easing for the 6th consecutive time. A move that the Central Bank Governor Kamau Thuge says is geared towards the need to support the recovery of private sector credit growth and bolster overall economic activity.
In November of last year, the lending rates had reached a maximum of 17.2%, but we have seen a steady decline all the way to 15.4% in May. We expect with this further reduction in the CBR that commercial banks will continue to lower their lending rates.
To ensure a more immediate response in the market, the central bank says by next week it will publish a revised version on risk-based pricing after receiving feedback from financial institutions. The CBK argues that the move has been occasioned by a lag in the transition of new rates, accusing banks of only moving with speed when the rates go up, but being reluctant when the rates come down.
We would like to see, when we want to ease monetary policy, there's a reason why we want to ease monetary policy, we would like to see that reflected as quickly as possible in the lending rates. And similarly, when we are raising the CBR rate, there's a reason why we are doing it. And it may be to stabilize the exchange rate. It may be that we think that it's to address inflationary expectations. And therefore, even in those circumstances, we would want the policy rate to be transmitted as quickly as possible.
Although early indicators show that there has been a rebound in 2025, supported by resilient service and agriculture sector, the CBK has reviewed downwards its GDP projection for the year to 5.2% from 5.4%, mainly due to external trade challenges, which the governor argues could have adverse impact on Kenya's economy.
And the potential slowdown in growth in the United States, the slowdown in the EU, the slowdown also in the UK, we thought that that would have a negative impact on our economy.
Jimmy Mbogo, Citizen TV, Nairobi.